My friends, what's going on? Hope you're having a wonderful weekend. Just wanted to jump in here, make my AMC Weekly Outlook video. Shout out to my wife for making me my friend's t-shirt. So, we got a lot to cover. I have no idea how long this video is going to take. These AMC Weekly Outlook videos are always going to take way longer than any other normal videos I try to put out because this is going to be kind of encompassing my overall what do I think is going to kind of happen this week as far as potential moves in the market, taking a look at the option chain, implied volatility. We're going to look at the overall market. We're going to look at APE. We're going to look at GameStop. We're going to do it all. All right. So, having said that, first thing I want to do is, before we jump into the video, we got to do all the disclaimers, right? So, nothing I'm giving you is financial advice. Everything is for entertainment and educational purposes only. Please make wise decisions for yourself, your family, and your portfolio. Also, please follow me on Twitter, Colin_Gladman. Easiest way to keep up with everything I'm thinking about throughout the day. If you haven't done so already, please like and subscribe to the video. Yada, yada, yada. Smash the like, subscribe, all that good stuff. Hit that notification bell. All right, first thing I want to do is please go out and get this book. My buddy Josh, Lucid Trades, recommended this book. I hadn't ever read it before. It came in the mail a couple days ago. I cracked it open last night, made it through the first couple of chapters, and it's already both reaffirming and giving me new information. So I just highly recommend go out, snag this book. If you're serious about trading, you got to be serious about educating yourself, and you got to be serious about working hard. And so, like I said, just highly recommend going out and snagging this book. All right, let's talk about option chain. So this week, we've got November 16th is going to be this Friday, which is going to be an OPEX options expiration date. So you're typically going to see more volatility on weeks like this. And that is going to be because when people buy options months, even potentially years out in advance, then you are going to see, you're just going to see way more open interest as far as the contracts go, which can lead to more volatility, both to the upside and to the downside. So these weeks are a little bit more difficult to kind of see in advance what's going on. Also, too, there's still the AMC 1 options, which are going to be the APE plus AMC that's going on. And so that's kind of the reason I haven't been covering the option chain as much lately is because it's still a little, kind of wacky and screwed up, if you will. But if you look over here, so this column right here, I don't know how well you can see it, honestly, on your TV, but the column that is going to be second from the left over here is going to be the open interest in contracts. So going into this week at $9, there's 11,234 contracts that are already in the money. And when I say contracts, you got to remember that each contract represents 100 shares of AMC. So if you can, which once again, I don't know if you can see, but there are a ton of call contracts that are currently out of the money. And honestly, sometimes that gives me a little bit of just like, I don't know about that, especially if those contracts start decaying. So if we don't see some, good movement in the stock and come Wednesday or Thursday, these contracts really start decaying, they start losing their value because of theta, then you could actually see bad things happen. You could see them unhedging from these positions. So if you have weeklies on AMC, I currently do not have any weekly call options on AMC, but if you do have them, please don't hesitate to take profit and capitalize on the money. If you made a great trade and you timed it well, then please don't hesitate to take that money because those options, they can expire worthless. A lot of them do expire worthless. Just be careful. But there are a ton. I mean, you go down here to $25, which for me, that's personally not a price target that's going to be on my radar this week. But I mean, there's 21,000 according to Yahoo contracts that are at that $25 mark. There's 23,000 at 30. So there's a ton of contracts and a ton of shares that would need to be hedged for if we do start to run. Now, if you go over here and you look at puts, there's not a ton of puts in the way. Actually, where the most are is going to be at that $25, which is no surprising as well. There's 17,000 puts, but like I said, the call options by far and away outweigh the put options for this week. So if AMC really does start to run, if the market does start to run, we got the CPI print that's coming out on Tuesday, I believe. All indications, to me, in my opinion, are going to be that it is going to be relatively bullish. I think I see the most conservative estimates are around the 8.1%. So if it comes in on target or even a little bit better, we could potentially see the overall market rip a little bit. The next thing I want to talk about is going to be implied volatility. Shout out to my buddy Trades. He's been talking a lot about this. I've done several videos over this for my Discord members where when talking about implied volatility, anytime the implied volatility really starts to spike on AMC, it makes those contracts unattractive because of the price of them. So what you really need to see is before an AMC run is going to happen, you want to see that implied volatility really drop, which you can see right here. Right before that big March run, the implied volatility got all the way down to 97. And then, of course, as it ran, then the implied volatility reached its peak around 198%. So currently we're sitting at 120% on the implied volatility, which the 52-week average is 124.8. So we're pretty much sitting right at average, which is good. If we decline even a little bit more, then that, honestly, that's only going to make me even more bullish because that's when you're going to have people who are willing to financially risk money on call options and people who actually know what they're doing, not just YOLOing and saying weeklies every single week and praying they get lucky. If we come over here to SPY, so here's kind of some levels that I've really got, on watch, if you will, when it comes to SPY. And these levels are all going to be ranges. So it's not necessarily exact price targets. It's going to be kind of what I'm looking for as potential supply zones for SPY. And we are in one right now. And that's going to be pretty much from about 405 to about 408 or so. This is going to be where you can see when SPY was tumbling down, this range acted as support. And then when it dropped below and it pushed back up, then it acted as resistance. Then it acted as support. Then whenever it came and pushed back down and rolled back up, then it acted as resistance again. So the more a certain level is traded around, whether it's acting as support because it's come above and dropping down below and you're getting good support off of it, or if it's something that an area that it's come up before and it's tested and been pushed down upon. So especially when it acts both ways, when you've seen it act as clear support and clear resistance, in my personal opinion, that is typically when that area needs to have more weight. So if we blast right on through this, if we start getting through, 408 or so, and it just starts carrying all the way up here, then I think we're going to test this big macro downtrend. Let me change colors here from the red. I'll make it yellow so it's easier to see. But from SPY's all-time high that was back here in January, and then it got rejected in March, and then it didn't quite make it back up here in August, but coming back up in here around that 430 to 428 range, that's going to be the next big resistance if we kind of blast on through what we've got going on right here. My last video that I made, which I don't even remember when I made it. It was like Tuesday or Wednesday of last week. I called for this SPY bounce right here because you had this horizontal level of support right around 390. You came down here and you touched on the 618, which is the golden pocket area for Fibonacci retracements. So if you go from your swing low to your swing high, you came down here, you touched the 6.8, plus you had the macro uptrend, which once again, let me change that color. I'll make it yellow as well for you. So where from down here on its low on June 17th, and then you came up here on July 14th, and then you came up here and you were right around that range and touching it right around September the 6th. So there were several areas or levels of confluence to say that this is a great place to enter into some SPY or at least see a relief bounce momentarily. And that's exactly what we saw. So now we're pushing back up here. So I'd like to see, I really kind of want to see above, 410, let's say. I want to see a close tomorrow at least above 410, and we may go higher than that. I already see people on Twitter celebrating about, how much futures are ripping. And that is a good sign. If you followed me long enough, though I always say, typically what you're going to see is at least at market open on Monday, all you're seeing is continuation from Friday. And obviously everything was ripping in super green on Friday. So my recommendation, which you don't got to listen to it, right? It's just a recommendation, is be very careful about that first 30 minutes to an hour on Monday morning because you could definitely see a whole lot of FOMO coming in and then potentially a rug pull, especially if it comes up here and it looks like continuation and, we start hitting 408, 409. If the price action doesn't stay strong, if the volume is not painting a wise picture, be careful. That's all I'm saying. There's nothing wrong with ever being careful. So now let's jump over here into AMC. So we are just at a huge important level, in my opinion, when it comes to AMC, and that is not clickbaity, that is not, hopium or anything along those lines. If you come over here and you use the visible range, which is basically just showing you the volume over here on the right side of the chart, so the volume is now being shown over here over price versus being down here on the bottom of the screen, you can see what's called the point of control. So whenever I go in here, just to show you guys, you can change the settings on it. Its default settings, I believe, is like 24 row size. So, and I'll just show you here. And what that does is it gets a little blocky and clunky. So anytime I'm using it, I come in here and I change the amount of rows to 200. And then also too, I change the value area to 100 because it's also default set on, I believe, 70. And then it just kind of grays it out. So I don't like that either personally. So I come over here and change it. So what it does is it's just giving you a more accurate picture of exactly what levels. And I mean, you can make that number whatever you want. I've come to find that right around that 200 to 300, some people will use, 1,000 rows or anything like that. I personally don't do that because I always trade in, ranges, but when it's just 24 rows, it's just way too clunky as far as I'm concerned. So, this point of control, and I'm using this from this time right here, and once again, this is AMC on the weekly chart, and I'm using it right here because this is typically where most of retail has gotten involved in AMC. I know it certainly is where I got involved, and so what it shows you is most people have bought, most of the buying has been done. That's what the point of control means. So your blue levels are going to be buys and your yellows are going to be sells. So a lot of the buying and the selling that is going to be done on AMC has taken place in this area, which, let's just get through this real quick too. Yes, I'm using the trading view chart. Yes, I know that all charts are not exactly showing the same numbers, but trading view is what I'm going to be using and is what I'm going to continue to be using. Yes, I agree all charts should be universal across all platforms. But we are crucial areas because we are right here on the point of control, which was the big resistance before the June run. Then it came down here and acted as support. Then once again resistance, then support, and now it has been acting as support once again. So, crucial area. Above these levels, I am bullish on AMC overall long term. Not necessarily on a day-to-day or even a week-to-week basis, but north of these levels of the pre-June run, and I'm going to be bullish on AMC. Below these levels of the June run, and it can definitely lower lows are on the table at that point in time. And what's really crucial about this, in my opinion, is, so this is just where me pulling up the chart from a point where I believe most retail got involved. If I scroll out, so point of control will move, but if I scroll out all the way to AMC's Inception, you can see that that point of control almost doesn't change at all. So once again, this is AMC in its entirety. Moving back in, right there. AMC in its entirety. Moving on back in. So this level is very important. If you come back here for basically, golly, what is this? For basically 2 years, AMC from 17 to 19 traded around this range. And if you came back here and you went, okay, what's a really important level for AMC to hold? I mean, you can just, it's just, this is just not rocket science as far as I'm concerned. In this range, above it, you're very bullish. Below it, you'd be very bearish. So we are at crucial times. We're right at the middle of that range. We want to see northern side pushes, if you will. Now, I already tweeted out about this, but this macro uptrend that started on that week of May 9th has held. Yes, it wicked below, but it never closed below this macro uptrend. So also a good sign when it comes to that. If we get in here to the daily, now something that isn't great, and it's not the end of the world, but we definitely could see a retrace on, is we do have a gap on AMC, and it's going to be from 860 to 880, let's call it. So basically we have a 20-cent gap. So if the overall market, or if AMC came out next week and kind of rolled over a little bit, coming down here and filling this gap before pushing back up certainly would not be the end of the world as far as I'm concerned. I'd even be okay with it. So that is going to be, that's the only potential, that's not great, okay? I said in the near term, we had a nice setup for upside on AMC, and that's because of this pattern right here. AMC loves breaking out of kind of these flat top resistance with a long uptrend coming up underneath it, and we got the break. I also tweeted about, be cautious of a head and shoulders forming right here. To me, that's pretty much the head and shoulders anyway, is invalid at this point in time. But, once again, this is just kind of an intraday look. You want to see, we want to see start making a higher high. We don't want a double top right here. So what a double top would look like would essentially be, it's exactly what it sounds like. But you would kind of make another top right here, kind of start rolling over, probably catch some support, and then continue on down. So we definitely don't want to see that, but that's just going to be kind of smaller, like I said, more intraday looks. So let's go back here on the daily. I hadn't even looked at any of the EMAs here recently. So we are coming up here to, the 20, the 50, and the 200 day, excuse me, the 20, the 50, the 100, and the 200 day. Excuse me, EMAs. I wouldn't be surprised at all if we get kicked off of some of these on the way up. I already made the case that if we do come up here, I wouldn't be surprised at all to see a fake coming up here, catching resistance, and then everybody in the world is going to be going, oh, AMC, head and shoulders right here. I can hear it now. And then it starts to come down like, yup, head and shoulders, and then it continues to curl on up past that. That wouldn't surprise me at all, so just be ready for all the AMC head and shoulders charts if we do get to see a nice push up. Now, I do think, like I said, I personally think that there is a decent amount of resistance above us. I would be surprised if we just start blasting through all this stuff. I said I think it's going to be at least a week or two, and this was middle of last week or so. where I said I think it's going to be at least a week or two before we can really look at bigger moves. My case in point is going to be the Bollinger Bands. So the Bollinger Bands, essentially what they're going to be doing is they help measure potential volatility moves in a stock. And if you come back here, you can see before any of AMC's really volatile moves, you have a tightening of the Bollinger Bands first. So the Bollinger Bands, essentially, they're going to squeeze together, and then they are allowed to expand. And that was John Bollinger's theory, is that periods of low volatility are followed by periods of high volatility. And you can see that happening, what I was showing you in the implied volatility with the option chain. So as the implied volatility in the option chain cools off, then you're going to see those bands really start to constrict, and then that's going to lead you to potential moves. So once again, just squeeze together, then an expansion. Squeeze together, then an expansion. Tight squeeze together, then an expansion. And these aren't always in your favor. Squeeze together, expansion to the downside. Here's the big one. This is where, if you followed me long enough, I was pretty bullish right here. The Bollinger Bands were getting tight. Thought we were going to come up here, break out of this, and see new all-time highs back in November. But unfortunately, the market didn't agree. Right here, squeeze together, push up to the upside. Right here, tight squeeze together before push up to the upside. So I do think we're going to need a period of kind of squeezing back together. If we do see upside this week, I think it's only going to come up to right in here. This is, I think we potentially could see up to about $11.25, somewhere in that range. I do think this week we could see up to the here comes the head and shoulder. I do think that's a possibility. And, the more we trade within the Bollinger Bands, these things are just going to keep, curling on down and on up. So I do think we need a little bit of a squeeze together. Always happy to be wrong on that, especially if the more volatile move is coming to the upside. So I don't know exactly how long that's going to take. I'll be watching, monitoring. But like I said, I do think it's probably going to be at least a week or two. And I tweeted that out, 4 or 5 days ago. So it could happen, faster. I'm always down for that. Now, let's get into APE. So this is what I was talking about on APE. Already kind of made a video over that. This is what everybody got their panties in a wad about on Twitter. And what APE is about to do is it's about to break out over here of this $5.70 range. Now, if you watched my other video, you knew that what I'm going to be looking for here is potentially a Elliott wave. So Elliott wave moves in 5 waves. Waves 1, 3, and 5 are going to be your uptrend or your impulse waves, and waves 2 and 4 are going to be your corrective waves. So I'm not going to spend too much time on explaining everything about it, but essentially what you do is you've got your wave 1 up. This is typically your wave where people have disbelief. This is going to be the one that most people are like, oh, it's just a momentary bounce before we come back down here and see lower lows. So like I said, this is typically where you have disbelief. And then it's always usually a very sharp, fast corrective wave. And that's when everybody does the, yep, I knew it, it's not going to happen. And it usually comes down here anywhere between the 0.5 and the 786. And you can see that it came down here and it touched the 786 perfectly. Now, then you've got wave 3 that starts. Wave 3, typically, your price targets on something like this are going to be the 1.618 extension. I'll change this to, we'll go lighter blue. Now, AMC before, multiple times, has gone as high as the 3.618 extensions. So, if you're like me and you believe essentially AMC and APE are virtually the same stock. It got its value from it. It's definitely potentially a possibility. However, I would be targeting, the 1.618, which that makes a lot of sense. If you come over here and if I just draw a line that comes across the 1.618, you can see, it came down here, it used this area as support, then used it as resistance, then it gapped down. So coming up here around that $6.76 level would be very normal, I think, to see the end of wave 3. And then from there, you typically get a 0.382 retracement. And this is where everybody's like, oh, it ain't done yet. and then you'll see one more push up that's essentially the same size as wave 1 before it's over, and then you start correcting. So I do think that there's potentially a lot of upside here on APE in the, we'll say, coming week or two. But great setups need great follow through. Right? Stop me if you've heard that one before. If I come over here to GME, so GameStop moves the exact same way as AMC. I've said this for a long time, but where you're looking at here is going to be, so GameStop and AMC, the biggest difference that you see here is going to be on the levels, okay? So where right here, GameStop essentially fully distributed almost all the way down, and rest in peace to my $22 GameStop buys. We missed it by $1.30. So, dang, that sucks. So close. But anyway, if you look at this, so GameStop is distributing further down than what AMC has. I drew this point of reference right here. So you can see, my cursor is moving at the same spot. So this kind of pulled down and up into this ball where AMC is essentially kind of caught the bottom in that area. GameStop came down much further than that. So if GameStop does continue to push up, and I think its next point of resistance right here around this $32 area from the support that it's found before its big push up, then that could potentially take AMC, up here to right around that same area that I was talking about, that $11.37 area, before you're going to start running into its next, not major resistance, but definitely an area that I think you're going to see some resistance at. Okay, and you can see right here, it came down here, found support, and then once it found, once it came up and retested on that retest, once it got kicked off, then the bears really stepped in, and you got a nice push down at that point in time. So if GameStop does, come up here to at least retest the 32 range, which I think is its most likely price target for GameStop, then that leads me to believe that that's probably going to take us up to somewhere around $11 and somewhat, let's just say between $11 to $11.50. So that's going to kind of be my upside price target for AMC. Downside price target would be is if for some reason something crazy happens, with CPI data. Let's see what we're looking at here fib-wise. So maybe coming down here and double bottoming off the 786 around that $8.34 range, or even just a straight double bottom off the $7.94. I think that would be bad. You can see, I'm just pulling this up right here. So AMC is getting up here. We're about to test its 0.65. So I would be surprised if we don't at least see a little chop in this area. I would be surprised just to see it blast right on through right here, just like you can see over here. It happened, came up, had to come down, refuel before it pushed up. So, maybe Monday or Tuesday we push up, then Wednesday, Thursday we get kicked back down before starting to push back up. And like I said, I definitely still see the setup for upside on the near term. Downside would be if it rolls over from here. So if we come up here, we don't even, get to the 0.618. If we get kicked off the 0.65, come down here and have to double bottom before returning. I think that's least likely. I really do. I'm definitely, I would say I'm about 65 to 70% bullish headed into this week. And listen, I would be surprised to see a bearish scenario play out for this week. Now, last but not least, I haven't fully rebuilt my cycle chart when it comes to AMC, but I still feel like this is tracking really well. Whenever all the trading view stuff happened and recalibrating charts and everything else that goes along with that, this chart got completely messed up, so I'm really going to have to go in here and rebuild it. But just to let you guys know that I am still, following. I'll just kind of walk you through this real quick. So, once again, this is everything that happened pre-June run, okay? So, to me, this move right here was the same move as this move right here. So, where we came down, then it curled over, pushed down, and then created what I called the shark fin. So, it came down, pushed over, and then created this area right here, which is what I call the shark fin, okay? And then came all the way back down here, then pushed back up, created another shark fin, okay? So that's going to be this one. Let me just back up, start over for you guys here a little bit. I'll just do it step by step. That way it's just as clear as I can make it. So this move right here, I believe, is this move right here. Before I go any further, the thing I want to stress the most about cycles is it's not about exact levels or anything like that. I believe so much trading is done through high frequency algorithmic trading through computers that the levels aren't going to be what's important. What you are going to see is you are going to see similar shapes and patterns, and that's because the computers are the ones that's moving the money around. So this move is this move. Then you have this shark fin to a spring. So shark fin to a spring. Then you got your little mini shark fin. Little mini shark fin. Then you push up into the M phase. The M phase right here. Then that curls over. Then you push up and you get your little flat top resistance area. Push up, get your little flat top resistance area, and then you get one more push. Then you get one more push. Then you get the big distribution down. Then you get the big distribution down. Then you kind of start an upwards accumulation. So big distribution down, upwards accumulation. Then you get the big push up into another flat top, up into another flat top. Then you get distributed down out of that. Distributed down out of that. Now, another thing that you guys got to keep in mind is this is not also to me calling for all-time highs. This is just another sequence in the pattern of what I'm talking about. And I believe these patterns play out on multiple time frames. Highly recommend following Mr. Booksy. He's really good at that. He's got a YouTube channel. He streams and does videos almost every single day. But it is not like this is just guaranteeing us to take us to all-time highs like what it did in June. I think we are going to see a nice push-up out of this, but the levels, as far as like what price is going to be going on, is going to be the most concerning part of it. Also, just real world and reality is we've always got to be worried about dilution when it comes to APE. If APE does start to make a really good solid run, then at potentially any point in time, AMC, Adam Aaron, the board of directors could use that to raise a whole bunch of money for AMC. And if that does happen, once again, it's only bad dilution, in my opinion. It's only bad dilution if that money gets wasted. If they use that money to shore up a bunch of capital, pay off some bad debts, then it's going to be great. And then I think you can actually see a really solid push in AMC stock price. So the big thing that I want to show you guys here too when it comes to the cycle and why I am bullish on AMC is going to be every time it got rejected right here. So all these rejection points were super crucial before the massive run happened. So if you take that same area, so I'm just going to create a line and watch what happens on the other chart. So I'll do this a few times just so you can see. So you got your top chart, you got your bottom chart. Look at that. Hold on. I'll do it a few more times. So resistance, pre-June run. What has it done now? It's become support post-June. It's pre-June, post-June. We are just barely on the northern side of this big resistance point. So, if we can stay above that, I will stay very bullish on AMC. Yes, there's going to be red days involved. No, it's not just going to be straight up. Once again, the timing is not what I'm looking for. What I'm looking for is a continuation of following the pattern, if you will. So, I don't know if, and like I always say when it comes to TA, quite literally every single second the market is open, you're getting more information. So I don't know if this little, curl up right here, it just could be this. Wow, that was a terrible little circle. It just could be this before we get another push back down. So this could be just this push up. Then we push down. Then we get another little push up before we push down. Then we start to see some big push ups. So for me, the big level I'm going to be looking for is, can we get above this area right here? If we can start, getting above, let's just call it, we'll call it 17 just to play it safe. We can start getting above $17 and I'm going to start feeling real good about stuff. Now you can also see right here, pre-June, other than its spring moment right here, it pretty much held the line, okay? So right here, we had that upwards accumulation. So it actually did, if you were following me back here in April, or towards the end of April, beginning of May, I was hoping that this area was going to be our bottom right here. And I think pre-APE split, that would have been around, I think it was $13, $12, $13. Anyway, somewhere in that ballpark. I was hoping that, excuse me, I was hoping that this area right here was going to kind of act as a double bottom before we started the upwards accumulation. Now that didn't happen. It came down lower, and that's why I always stress that the levels at which all this takes place is going to be a little bit different. Now, I'm about to use a bars pattern, but I want to be real clear. The bars pattern is just a tool to give you an idea of what things could potentially look like. And what I was hoping for is from right here that this wouldn't have come, this far down, and essentially this all would have happened right about in here. So, but it didn't happen. I was hoping this kind of mountaintop here, if you will, was going to kind of form a base over this. So I was hoping that this was going to do, put it right on. So levels originally I was looking for was going to be something like this, where this would kind of base up here. So because all this got pushed down so much lower, and if you come over here and you look at the global market, once again, in June, when all that was happening, the market was still making all-time highs, okay? So, I mean, just look at this. As Dave would say, would you just look at it? I mean, the market was just blowing and going at that point in time. Market was just straight up, essentially. We have not had that. If anything, there's been some relief bounces, but more than anything, we've just been in a massive correction. So, I do think the global market overall has negatively impacted, potentially, yeah. So basically just like this. I would have hoped that essentially this base would have come and then we would have started upwards accumulation and then built a base on top. Then we dump out. And then, so I am still, I don't know any other way to say it. People are always like, you're always negative. Like, no, I'm just giving you realistic price targets of what I see happening. And so I would have liked to have seen this. We didn't get that. Now, it's not the end of the world. We didn't come down too much lower. But that is, I do think it's crucial. Like I said, we stay on top of this. That's the big thing that I'm going to be watching for. And if we can stay on top of that, then I feel like we could be forming this type of base right here. This would allow our Bollinger Bands to come in before we could really see some moves. So if we do start seeing, some moves, if we start coming back, if we start coming back up here, and especially, we start doing one of these, we get some flat top, and one of these, it could go for sure. And what you're going to be looking for is if we really see some crazy volume and volatility, then it could be time for it. And once again, not necessarily all-time highs, but certainly, I'm going to do that every time, but certainly a push up towards at least close to all-time highs, which now would be like in the $40 range. I would be very surprised if we see a big volume push and everything coiling up right here. I would be very surprised if this move does this and then just dumps right back over. So it's definitely possible, but I think it's more likely that we would see a push at least up here, towards like potential new SOS territory. And then we start getting up into these resistance lines, then we can really start talking about all-time highs again. But you just zoom out and look at it. We're at a crucial time, my friends. We got to stay above this. So if we can do that, I will stay very bullish. We don't do that, I will not be bullish. It's pretty simple. And then real quick, last but not least, and I'll let you guys get out of here. I appreciate your patience. If you're still here, God bless you. But how you can always look at these is you go from your swing low to your swing high, back to your swing low. So AMC broke out of the 2.618, so pretty much between the 2.618 and the 3.618 on the January run. On the June run, swing low, swing high, back to your swing low, hit the 3.618 right on the dot. So if we do the same deal, swing low, swing high, assuming we've seen our low, 2.618 would be 111.72, 3.618 would be 152.12. So that is just quite literally showing you what happened pre-Jan run, pre-June run, and now potentially what happened if we start getting up towards all-time highs again. So thank you for taking the time to watch this video. We went over a lot: the option chain, the implied volatility, the global market, GameStop, APE. It's been a long video. Thank you. Please follow me on Twitter, like and subscribe to the video. I'll see you in the next one. So this week, last but not least, upside targets. Like I said, potentially looking at that $11 to $11.50. I think is going to be about as high as we go this week. Downside would be low of about $7.93. Looking for a double bottom right there. But I am looking for us to essentially create this little base right here. And that's kind of what I was talking about in that 1 to 2 weeks of chilling and letting the Bollinger Bands come back in before potential moves higher. Have a good one, my friends. I'll see you in the next one.